Hi, this is Martin from Secrets, channel for learning about trading and investing. Welcome to weekly stock picks. Right. So I'm planning to come out with potential long or short trades in the weekly basis. Few stocks, handful of stocks. So this is the first part of that, and today we have some momentum breakout as well as pullback trade opportunities. That's there for the week that's starting from August 8th, Monday tomorrow, 2022, day after tomorrow. Right, Monday. So let's get into and see which is the first one on my list is ICICI Bank. Right. So ICICI Bank. So the following the reasons why I'm going for that. So just to give a fundamental brief on the stock. Right, ICICI is one of the largest private sector banks in India, and it is clearly delivered, and it's nearly 20% of compound annual growth rate is what you see in the last 5 years. That's a very large FII holding. It's 43.5% of foreign institutional participation itself says a lot about the bank, right? How its numbers are working out from the fundamental point of view. But we are more interested on the technical side in the momentum, right? So this is a momentum breakout, right? Before getting into that, few chat patterns. So this is the chart for that, right? So this is the weekly charts that you see. You can clearly see that there is a trend line. There is a downfalling trend line, and that's a correction that has happened when the entire market corrected, right? And then you can see a complete recovery has happened. As of yesterday, the last week is a weekly chart. So by last Friday, a complete recovery has happened, and that forms a rounding pattern of nearly in a year, kind of, right? So that is also a confluence of a rounding pattern and a trend line breakout. So this downtrending trend line, the price is broken out from here. Remember, we earlier had an ascending triangle breakout way back in September month of 2021, which had a huge gap up, right? And that gap was closed quickly when the selling pressure came in at 840 kind of levels, and then that's when the pullback happened, which went to the 628 levels, right? Like those who found opportunity at 600 kind of levels for ICICI Bank, and they must be really having solid profits right now. So, but anyway, we are momentum breakout traders. We buy at high price and then sell at even higher price, right? And not at a dip. We don't anticipate on the fundamentals and buying at a dip. It's tough from the technical point of view. ICICI Bank is at a neckline of a rounding pattern. We also had an all-time high few points away from there at 848.67 all-time highs there. So this is the trade plan. So those are the things that you can see. It's an all-time high level. It's a weekly rounding pattern, and as well as it is also having a trend line breakout that is happening. So any movement above this price, we're going to buy no matter what happens, and we would have a retracement down at this 805 levels, and we look for the target of 850 kind of. We look for a target of nearly 970 kind of levels, right? So that's a 1:1.5 risk reward. So entering at 850 and 770 exiting would be the trade. Right? So this is the risk reward. This is a reasonable risk reward, and it's possible that it can fall down and then it gets stop locked. We put a tight stop loss because it's a swing trade of few weeks. Any retracement that goes below this entry alert candle would mean that probably it may take some more time of consolidation or a pullback before we can break out from the neckline once again. So we would just happily accept the loss whatever happens, right? It's fine. We may get another opportunity similarly, and that time it may work. That time also it may fail out. But when we have a risk reward reasonable, if you can trail it upside, all your small losses. So it's a small loss and a good risk reward. Rounding pattern trend line both combined breakout, and also the momentum is bullish and rising, and the trend indicator radix also is in the positive zone on the medium term as well as the short term. So it combines together to form clear bullishness on the swing trades. So that's about ICICI Bank, and you can trade this on cash by buying the stocks and then selling it when the price moves up at your target risk reward. You can also do it in the futures, if you want to roll it over and keep on trading. Futures may be a good option right? If you use it, or you could buy the call options or sell the put options, using the options. So different instruments can be traded, but the fundamental risk reward is this, and then accordingly I would hedge it and take positional trades based on hedge. So all that is outside the scope. So you can use any of this. So the position size, so how much of quantity has to be bought, is based on your capital size. Typically 1% of the capital is what you have to risk, and then you can pyramid, and then as your target meets, you have to trade, and then pyramid, add more positions, and then trade your stop loss. So that's how it goes. So position size, how much quantity, depends on how much capital you have, and 1% of that is ideally recommended. Right? And trailing stop loss are up to you. You're happy with the target that you got, fine. If you want to trail, and then if it's a positional trade for a longer term, then you can go for that as well, right? So that's about ICICI Bank, India's largest bank. The banking sector also is clearly bullish on the momentum and the trend positive for the short as well as the medium term, right? So these are swing trades which may not last more than 1 week or 1.5 weeks. Maximum 2 weeks is what swing trade should ideally be. Anything beyond that becomes positional, right? So that's ICICI Bank, and then we're moving on to the second stock, that is TVS Motors. It's a two-wheeler manufacturer, one of the biggest two-wheeler manufacturer in our country, and it's having 24% of the export market that is there outside our country, right? So that means 75, and then remaining of that, so nearly 24% of foreign business is there. It's not a manufacturer that's confined to our large country alone. It's a global company when it comes to the manufacturing of the bikes and two-wheelers and some three-wheelers and the spare parts and all that, right? So if you look at TVS Motors, you can clearly see that it's an all-time high level, right? Look at the charts. It's again a rounding pattern, but the difference here is a weekly rounding pattern of 3-4 years. 5 years actually, 2017, 5 years of consolidation, rounding, and then breakout. When definitely this is going to be big move from here, right? So the longer the period of consolidation, the higher would be the breakout opportunity. But and if you what we have used is a retracement levels. From this previous swing low, the retracement is drawn to current high, and then if you look at that way, we can clearly see that, right? If at all the price has to fall down, it would fall in at this 23.6 retracement Fibonacci retracement levels, and then 38 is further down here. But so first level of support that you would look at is the 23.6 Fibonacci support, and such breakouts. We have also drawn a Fibonacci extension which would project what is the likely levels of price. So if you look at that, 78.6 is the level where the price is hit already. That is very close to probably the initial targets, and definitely if it is breaking out further from here, you just can't enter the trade unless if there is a pullback. So this is essentially a pullback trading opportunities. You do not enter if the price moves immediately. We will enter it only if the price is retracing back, only if the price pulls back, because it has already broken out few weeks back. For 5-6 weeks back, the breakout has already happened, and so it makes sense for waiting for a pullback. So that pullback could be at the 61 retracement levels. So we would take a trade little below. So if there is a possibility that you make it stopped out and it can go back to the neckline of the breakout and then move further up, then we lose the trade and we enter again, right? You'll adjust the risk reward and then enter criteria, exit criteria, charges, all that accordingly. But as of now, we would assume that we would have a pullback that may, and some kind of consolidation may happen at this near to the 61 Fibonacci extension, Fibonacci projection extension levels, and then we would take a trade somewhere near to the 850 levels, and would target for if you would have a stop loss at 770 below, and you would target for 970. The risk reward is 1 point, more than 1.5, 1:1.5. That is reasonably good, right? So we can trail that, as I said, and the quantity that we bought depends upon the 1% capital size of your capital size ideally, and then trail it as you need, right? As you want to increase the profit level and add or remove the position as per how much of risk management that you have to do. But this is a swing trade that could last for 1 to 2 weeks max, right? So another reason is that the momentum on the medium as well as short term is bullish. The trend on the ADX indicators clearly says that it's bullishness, a rising trend on both the short term and the medium term both. Right? So and auto sector, if we see, it's clearly bullish. One of three sectors are there which is clearly bullish on both medium term and short term. That is, one is banking, second is FMCG, and third is auto. All these stocks are clearly showing bullish momentum, and some pullbacks, retracement, but definitely will be there when such kind of breakouts happen, and that is obvious, and that is the opportunity that you have to look out for. So it's the first one, ICICI Bank, was a breakout trade. This is a pullback trade, both based on the momentum and trend and the Fibonacci levels that we are studying. Right. Moving on. Anything else left to the TVS box? Right. So it's all the same. Right. So the third stock that we have is from the FMCG sector. That's another sector, another sector that is booming and showing clear bullishness from the momentum perspective on the short term as well as medium term. And that is Asian Paints. It's the largest paint manufacturer of the country, and it is giving a very reasonable dividends payout. Even the TVS also is giving a reasonable dividend, right? Very reasonable, dividend payout ratio is there. If you look at that, coming back to the Asian Paints, it's having a very good dividend ratio. It's having a largest FI holding as compared to the other peers, other paint manufacturers, if you see. So it's the largest. So that's fundamentally strong enough and giving consistent 8 to 10% of CAGR for the last 5 years. Right. So right now, if you look at the charts, what do you see here? This is the Asian Paint charts. You can see here also. You can see that there is a consolidation of almost a year. Right. It's a rounding pattern. A good retracement. Now, what is the retracement? 30% of retracement has happened from one of the premium blue chip stocks, Asian Paints. 30% has gone down, and a complete recovery has happened. Right now, it's at a very crucial resistance zone. Right. Now, it is closed above that neckline. If you look at this one way, but no, we would take the momentum breakout trade here, not a pullback. So the moment the price breaks above the allowed weekly candle high, we will take the trade, and then we will put a stop loss just below the candle low, with that weekly candle's low, and then we'll target for a reasonable upside up to 3,800. So another reason for taking this, so what we are looking for is that we are anticipating that as FMC market is rising, FMCG is one of these leading sectors that is driving the markets, and then there is a potential breakout that can happen, and it's a consolidation and rounding pattern. So price, momentum, trend, and the support resistance levels are in favor of taking. The volumes are also good enough, right? So what are the how we take FMCG sector is one of the leading. We already talked about that. So rounding pattern is a trend line breakout. There is a trend line in the retracement, and the clear trend line breakout has happened here. Right, in the last week, clear breakout has happened, but rounding pattern breakout is so probably it may consolidate here for a long period of time. Probably we may get stopped out below this during that consolidation. It's okay. That is how you trade in it. You just have to anticipate that breakout happens. You just have to anticipate that the pullback would take a support, and all these are risks that we take. So that element of risk is always there. So, but look at what is the risk reward ratio here. So entering at 3,500 above the neckline or the candle alert, and putting a stop at 3,300. That's a 200 points of stop loss, and the risk reward is 1.275. That's, you're looking at 3,850 kind of levels. 3,850 would be above, slightly above at the 78.6. So you can trail it ahead. Quantities, as I said, always depend on 1% of the year, and then trail and add positions later. So that's Asian Paints, India's largest manufacturer, India's largest private sector bank, ICICI Bank, and then our leading two-wheeler manufacturer. All of these are blue chip choice, and then all of these are opportunities of entry, right? If the market is going to rally further, so getting stopped out, need not worry. But an opportunity comes, then you'll have to participate. TVS Motors should have ideally participated at the 795 neckline zone, but we missed that. But so we wait for the pullback. Other two, we are at the zone of the breakout, so we'll have to see whether we'll get it or not. If we don't get, we'll get another chance. Hope this helps you to identify a few momentum breakout and pullback trade opportunities for the next week. So if you found this interesting and then convincing and then helpful from the technical analysis point of view, then please do like, put in comments, and share to maximum. And definitely if you're not subscribe. Right, thanks a lot. Happy trading, happy learning, happy investing. Bye.